Want to know how to make your investment dollars go further? I've got 5 small cap stocks under $5 that could double in the next year. Of more than 4,300 small company stocks, these are my 5 favorite to buy for 2020. We're talking best stocks under $5 per share today on Let's Talk Money.
Beat debt.
Make money.
Make your money work for you.
Creating the financial future you deserve.
Let's Talk Money.
Hey Bowtie Nation, Joseph Hogue with the Let's Talk Money channel here on YouTube. A special shout out to everyone in the nation. Thank you for spending a part of your day here. If you're not part of that community yet, just click that little red subscribe button. It's free and you'll never miss an episode. Nation, since our best stocks under $10 video in October, you've been asking for another on cheap stocks. 4 of the 5 picks in that one are beating the market, and the group is averaging a 7.5% return in just the last month alone. So let's go lower. We've already seen how these low price stocks can boost your portfolio for outsized gains. What about stocks under $5 to really give it growth? Now, to be clear, we're not just talking about any stock under a $5 share price. Shares of Avon products trade for $4.40 each, but the company has a market cap of nearly $2 billion. No, I want to find the best small cap companies, cheap stocks of small companies primed to be the next Amazon or the next Apple. For that, we'll be looking at companies with a market capitalization under $1 billion, along with some critical factors. The reason here is that small caps just tend to beat the market. We see in this chart of the Russell 2000 index of small cap stocks, the green line here, and the S&P 500 index of the largest U.S. companies in red. Smaller stocks have a habit of breaking out for stronger returns. But small cap stocks have broken down since early this year and are actually lagging by almost 9%, mostly on those recession fears that we had earlier in the year. That means valuations have come down. A lot of investors have bailed on those stocks, and you can pick up that 9% gap plus more with the right small stocks. Now, these small companies also have better financial flexibility to shift with the trends and are not well covered by Wall Street analysts. You've got a much better chance at finding that great undiscovered investment. I don't want to oversell this though. I want to walk you through real quick on what to look for to find stocks under $5 and these small cap opportunities. Then I want to reveal those 5 small company stocks that you'll want to put on your radar for 2020. In fact, I'm putting these 5 stocks in my Webull paper portfolio with $10,000 each. I love the option on Webull to create those test portfolios and different strategies. Webull is a newer online platform, but perfect for stock traders. It's completely free to invest. You'll never pay a commission to buy or sell stocks, and the app is set up for stock trading in a way that Robinhood just can't touch. With Webull, you not only get that trade simulator with a paper portfolio, but also access to extended hours quotes before and after the official market open. So I'll be tracking these 5 stocks for a couple of months in my Webull paper portfolio and then update you on how they do. I'll leave a link to Webull in the description below if you want to learn more about using that trade simulator to test out your stock trading ideas. Now, screening through more than 4,300 small stocks under $5 a share, I looked for companies with positive sales trends and strengthening financial health. So I screened for measures like falling debt to equity ratios, sales in the last year that were higher than previous, and an improving current ratio. Watching for that financial health is critical when you're picking these small cap stocks. You know, these companies don't have the scale or the financial power of those larger mega cap stocks. A weakening economy or a financial trend can wipe them out in a heartbeat, so you need to find the ones with the best likelihood to survive until they can grow. Now, you're never going to find a small cap stock with a perfect balance sheet though. These companies live on debt, so they're usually pretty highly leveraged already, and many of them are not profitable. But look for the ones with that lower debt to equity ratio and improving sales numbers. You know, using these criteria, I found 5 stocks under $5 that could be worth a look. To get that important diversification, I've tried to pick stocks from different sectors. So we've got picks from energy, from retail, healthcare, and financials in this list. Our first here is Range Resources, ticker RRC, with a 1.9% dividend yield, which is really rare for these small cap companies. RRC is an oil and gas exploration company out of Texas, and looking for these small cap stocks, you're going to find a lot like this one. The energy sector has just been slammed over the past 5 years on those weakening crude prices and a wave of supply out of those shale U.S. fields. Range Resources is one of the lower cost producers where it produces and has a huge backlog of drilling locations it has in inventory. This makes it a best of breed in the space, but even that can't make it immune from a bad economics of supply and demand. Now, I realize that's not a very good pitch for a stock you might consider buying, but I want you to know the risks here. When oil and gas prices do move higher, this one is going to be one of the first to benefit, and I think the share price could be worth double what it is now. Shares trade for 7.9 times earnings, but profits are expected to pretty much bottom out over the next year before starting to recover. Analysts have a low target of $4 per share and a high around $5 each over the next year, but this is one where most of its life is waiting over the next 3 to 5 years. These small cap oil stocks are definitely ones you want to be strategic with your investing dollars though. Consider saving half of your investment for later, maybe 6 or 12 months after that initial investment, just in case stock prices continue to fall. This sector is one of the only values left in the market though, and I don't think investors want to ignore it. I added my 5 favorite oil stocks to our sector investing series just recently. I'll link to that in the video description below as well. Next here is deal site Groupon, ticker GRPN, and although this one is a little bit bigger at $1.6 billion, I really like the potential here. Groupon competes in 2 markets. First in the daily deals segment where local businesses advertise and pay Groupon 30 to 35% of the coupon prices. Also in the direct shopping segment where customers can buy directly on the site and where gross margins are more like 12 to 15% range. Now that daily deal space puts it in direct competition with social media platforms like Facebook where businesses can advertise on their own. Direct shopping puts it in competition with Amazon. Both are tough markets, but fortunately for Groupon, also vast and growing markets. Online retail sales are growing at double-digit rates every year, and the trend to buying experiences fits well with Groupon's coupon deals. Now, what I like about Groupon is this rock-solid balance sheet with just $200 million in long-term debt and over $840 million in cash. That's a third of this company's value just in cash. Shares trade for 19.6 times earnings, which are expected to jump 73% in the next 4 quarters. I'm not sure it can make that kind of growth, but even profit growth in the 20 or 30% range could be enough to bring investors back to this stock. I think Groupon has some real strength here in its platform and a lot of fundamental value in that balance sheet. Even if that earnings growth disappoints, the company could be a buyout target someday to fold into a larger retailer. Analysts have a low target of around $2.80 per share and a high of $5 each over the next year, and I think the next 4 quarters could be pivotal for this company. $250 million Ceres Therapeutics, ticker MCRB, trades for just $3.60 a share and could be an outperformer in 2020. The biotech company is focused on the ulcerative colitis market with over 700,000 patients in the US alone, as well as other immuno-oncology treatments. Ceres is expecting 4 pipeline milestones in 2020, any of which could bounce the shares on headlines. The earnings picture is ugly here, but that's how it is with biotech companies. Biotechs like Ceres burn through cash until they hit that blockbuster and then sell it to one of their program partners. The company has no long-term debt though, and $102 million in balance sheet cash seen as sufficient to fund operations through 2021. There are only 3 analysts here with price targets, so don't read too much into this, but a low target of around $8 a share and a high around $11 each is definitely something that puts this stock on my watch list. The smallest company on our list is $169 million Elevate Credit, ticker ELVT, a subprime online lender for borrowers in the US and UK markets. Now, Elevate is a small fintech company, but turned profitable in 2017 and has booked triple-digit earnings growth in each of the last 2 years. Cost to find customers has plunged over the past year to $184, which is 25% lower than the $245 cost it booked per customer in 2018. Shares here trade for just 6.2 times earnings, which are expected higher by 24% over the next 4 quarters and could continue to climb from there. So I feel like investors still aren't giving much credit to fintech loan companies, and you can kind of see why after the experience with Lending Club's falling stock price since its IPO. While Elevate may not have the size of some of those other lending platforms, it's profitable and the valuation here is just too low to ignore. There's just one analyst watching Elevate here, so you can pretty much ignore this chart, but I had to include it for consistency. This is a rare opportunity in a small cap stocks with a profitable company and solid growth. I can easily see this one going to $5 a share and beyond in the next 12 months. Nabors Industry, ticker NBR, is the world's largest land rig drilling contractor, and shares here are actually below $2 each. Okay, last oil and gas play here, I promise, but I couldn't pass up Nabors on the list. I like Nabors because not only is it a leader in the US drilling market, it has a strong international presence where rig counts should start to improve soon. The earnings picture on this one is not pretty, but the company has the cash flow to cover its debt payments, so I don't think there's any existential danger here. The analysts on Nabors think the share price has bottomed around that $2 lower bound and could go as high as $4 per share over the next year. Just like Range Resources, this is one you have to watch for a while. Click on the video to the right for the 5 oil stocks that should be on every investor's radar in 2020. Dividend yields as high as 10% and upside price appreciation. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.